What is going on, traders? It is James Lee here from Celestin Capital, and welcome to today's video, guys. Before I start this video, I must say, I know this video is going to be contradicting to a video I posted 2 videos before this one, where I talked about directional bias and how you should always go in line, or for the most part, go in line with the direction of the trend, with the direction of the higher time frame, with the direction of the overall trend, right? You should always flow with the market, not against the market. But there are circumstances where you can counter trend trade. And that's what we're going to be talking about in today's video. We're going to be talking about counter trend trading and how you can take advantage of these, as you can see here, these slight down moves within the market. You can see this down move right here is 100 pips, right? And you can surely make some money off of 100 pips. Even though the overall trend is up, you can see that these different opportunities that allow you to catch moves within the market are against the trend, right? These down moves are against the overall trend of the market. So even though the market is up, you were able to catch certain moves within the market that bounce off of what? Bounce off of supply and demand zones. Now, we're going to take a look at this. I'm going to explain everything and how you can counter trend trade in this video, guys. So without further ado, let's go ahead and hop into this video. Now, before I get into the live charts, I want to show you guys something. So, we talk about market structure a lot. And again, as I've emphasized time after time, market structure is extremely important. Market structure is the foundation of how, you trade. Whether you're a smart money trader, whether you're a regular retail trader, it's all the same. Market structure is market structure. There's no difference between market structure with smart money, market structure with any other kind of strategy. It's all the same, all right? So, let's take a look at this, right? We have a basic uptrend, right? Higher highs and higher lows. Now, when we make a higher high, what can we expect? We can expect a retracement to make a higher low, right? And then we make another higher high, a retracement to make another higher low, right? Make a higher high, what can you expect? A retracement to make another higher low. Now, here's where counter trend trading comes into place. If you see a higher high being made, right? If you see a higher high being made, you can expect a potential retracement. Now, even though the overall direction of the market is up, you can catch these retracements to the downside, down to these demand zones. So rather than waiting for this entire downtrend or this entire retracement to form and anticipate the move high to make another higher high, what you can do is anticipate the mitigation of this demand zone. So you can catch the retracement down to the demand zone. And then if you want, you can leave that trade. You can stop trading for the day, or you can take another trade and take it to the upside to create a higher high, right? Counter trend trading, we're focused on catching the retracements within the market because we know that the market does not do this. It doesn't go up forever, nor does the market do this. If that was the case, we'd all be filthy rich, right? So anticipate the retracement, and you can position yourself within this retracement to take it down to this demand zone, right? In the case of an uptrend, demand zone. In the case of a downtrend, you can catch the retracement up to a supply zone. So in this case, let's take a look. We see again that we have an uptrend. Now, here's what's important, right? You don't want to just anticipate a retracement out of nowhere. You know that a retracement that market usually bounces off of supply and demand zones, right? So if you see this retracement happening, it's not happening off of nowhere. It's most likely happening off of some higher time frame supply zone, as you can see here. Some higher time frame supply zone from a downtrend that happened earlier within the market. Oops, didn't mean to do that. Is most likely coming from some higher time frame supply zone that happened earlier, right? So if you scroll to the left, you'll see that this retracement is not some kind of random retracement. It's actually bouncing off of some previous supply zone, as you can see right here, to give you some mitigation. So it's mitigating this supply zone to come down to mitigate this demand zone. And then ultimately, it takes out this liquidity. Again, that retracement is left as liquidity on an uptrend. On a downtrend, the retracement, the lower high is seen as the lower low is seen as liquidity, because ultimately we're looking to take it out, right? So we have a downtrend here, the lower low, which is right here, is seen as liquidity because we expect the market to take it out to continue making lower lows, right? Liquidity right here, got liquidity right here, and the market continues in that direction. So with that being said, let's go ahead and hop into a live chart and take a look at how we can actually position ourselves to catch these counter trend moves within the market. And don't worry, guys, I'm not going to cheat you. This is what we're going to do. We're going to do this. Let me go ahead and clear this out. All right. So you guys don't think I'm cheating at all. Let's go ahead and do something like this. So let's just scroll up and down, back and forth, back and forth. All right. So here, we're going to stop here. We're going to instant replay. All right, here we are right here, right? So we're right here. Overall direction is, as you can see, we are currently bearish, most likely on the weekly, but on the daily, it looks like it is bullish, continuing up to mitigate some higher supply zone, as you can see right over here. Got supply zone right here to mitigate. So we can expect some kind of retracement from this area. So let's go ahead and take a look. So as we're going up, let's play this out a little bit. As we are heading up, right? As we're heading up, we can expect the market to bounce off of supply and demand zones. So we may get some kind of mitigation right here. It may not be a big one, but you can get some kind of mitigation. Let's see if we can go to 4 hour. All right, good. You can expect some kind of mitigation. So if we break this low right here, we're potentially coming down to mitigate this demand zone, right? Coming down to mitigate this demand zone. And then ultimately, we're looking for something like this. So if we break this low, we're looking for it to come down here and then continue up, right? So let's see. If we get a break of this low, we do not get a break of the low, so we're continuing up. But as you can see, you got some kind of mitigation of this supply zone, this down move right here. Now this down move, if we take a look, is a total of about 60 pips. You can definitely make some kind of money off of 60 pips. Now let's go ahead and position ourselves within some kind of move. So we have another supply zone right here. We're going to take a sell. We're not going to do any kind of entry criteria. We're just going to put our positioning right here. And let's see if we get some kind of sell, some kind of rejection off of this demand zone. Off of this supply zone. So as you can see, we got some kind of retracement down here. As I said before, this is where I had it marked up. If we go back, let's go back really quick. As you can see, we're getting some kind of mitigation from this demand zone. Even though it broke this supply zone, we came down to mitigate this demand zone, and we're continuing up. So let's mark this up once more. And again, we're not worried about entry criteria. We're just going to put some a position there just so I can show you that it gets mitigated, that you can catch, even though we're on an uptrend, you can catch the short-term down moves to ultimately back down to a demand zone to ultimately continue up. So let's see if we continue mitigating deeper within the demand zone. All right, so let's go ahead and nope, we didn't get any mitigation this time, and that's fine. So we'll continue to this area up here. So we'll put a sell right here within this area. This is a daily POI. So let's go ahead and do that. Stop loss right here. So let's go ahead and play this out. Play this out. So as you can see, we are in it. If we drop down 4 hour, we're probably coming down to mitigate one of these demand zones right here. So as you can see, we're mitigating it. So you can catch these down moves back down to these demand zones, right? So you don't have to ultimately wait for this, as I told you before, you don't have to wait for this, for price to come down here to take a buy order to the upside. What you can do is look to the left, find a supply zone or demand zone. In this case, it's a supply zone. Find a supply zone, mark it up as we did here, and then anticipate some kind of rejection, some kind of retracement to a lower level demand zone, ultimately to continue up. As you can see, tap perfectly within this order block that I have marked up right here. And I showed you guys this is not fixed. I literally shortened the chart so I couldn't even see it, but yet it's doing exactly what I'm saying. I'm not saying I'm some kind of guru. I'm not some kind of magician. I'm just reading the charts, reading price action, reading the structure of the market, right? Simple as that. So let's play this out a little bit. So this could have been your TP. The demand zone right here could have been your TP. Right here. If you wanted to, it would have been a nice. Now, again, as I told you, this is without entry criteria. If you have entry criteria, obviously this would be a much better RR. This is not even one RR. This would have been a much better RR if you look for Wyckoff and extra confirmation within here. But the point is that you can take the moves from a supply zone. You can counter trend trade. You can take the moves from supply zone and sell it down to a demand zone. And then if you want, you can take it right back up as it's doing right now. Let me actually play this out. As you can see, we've gone even lower, potentially to make it lower demand zones right here, maybe. Let's see. And ultimately, I'm expecting this high to get taken out. So we're going back down to potentially, let's take a look on the daily and see what we've got. May mitigate off of this demand zone right here. Let me delete these so it's not confusing. Mitigate off this demand zone. If you want, you could probably take a buy order. Again, no entry criteria, which is basing this off of structure, and I'm showing you guys how to counter trend trade. So even though the overall direction of the market, you can see how you can still profit from counter trend trading. So close to entry, but we didn't get an entry. That's fine. So again, as I said, ultimately this high was taken out. Price just came down to mitigate some lower level demand zone. And then price continued to the upside. So let's look for another supply zone. We can expect some kind of mitigation. I don't think this is going to mitigate much at all, but we'll see. Let's take a look at price and see. So as you can see, we have some small mitigation, nice mitigation, not small, but nice mitigation right here. This is a total of 270 pips. Very nice. But ultimately, again, this is being liquidity because we've got sellers of the market. But because we know that it's bouncing off supply demand zones, we know that we're only selling short term, right? We're not expecting this to sell all the way down to here, right? Because ultimately, the overall move of the market is bullish on this time frame, at least. So again, we're anticipating that it bounces off some kind of supply, or excuse me, in this case, some kind of demand zone to continue up ultimately, right? As you can see, that's exactly what happened. If you position yourself in here, it would have been very nice. As you can see, this is a total of, you can measure the pips if you want. This is a total of 400 pips. You can easily make a ton of money off of 400 pips. So as you can see, as I showed you guys, you can counter trend trade, right? You hear a lot the term the trend is your friend, but you can trade against the trend if you really want to. So again, guys, this is the entirety of the video. I hope this made sense for you guys. I tried to explain it as simply as I could. And as I said before, scroll to the left, look for supplier demand zones. Let's actually take a look at a bearish market and see if we can capitalize off of a bearish market. Let's see. So we've got a bearish market right over here. Let's see if we can capitalize off of something like this. We can expect it, or a bullish market, excuse me. Let's take a look at this right here. So we have a nice one right over here. So let's take a look. As you can see, the market is on a downtrend, but what can we expect? We can expect price to mitigate off of demand zones, right? So as you can see right here, we're on a downtrend, but We scroll to the left, you can see, oh, this is ugly. We don't have any wicks over there. So let's see right here. The market is bearish, but at the same time, we're looking at mitigations of demand zones. Price mitigating off of demand zones. Demand zones. If you want to look at it the other way, price is mitigating off of supply zones right here, as you can see. Nice counter trend trading. Nice counter trend trading. You got another entry right here. Nice counter trend trading, right? So the trend is your friend, but to a certain extent. You can actually go against the trend if you want. All right, guys. So that's the entirety of this video. I don't want this video to be too long. I just wanted to quickly get on here and show you guys exactly how you can counter trend trade, right? So again, this was without any entry criteria. This was just strictly off of supply demand zones. Now, if you go to a lower time frame and you confirm whatever your entry criteria is, if you confirm that the move is bearish down to a certain demand zone or supply zone, then you get a much better RR and you're able to catch even more pips. You're able to secure even more a better risk to reward, right? So again, I hope this video made sense. Scroll to the left, look at supplier demand zones, and trade from there. Now, if you don't get any entry criteria, don't force a trade. Do not force it down to anywhere. Now, again, price did not have to come down here and mitigate this demand zone. Price could have easily gave us a single candle and then just continued all the way up. Or price doesn't even have to give us any kind of bearish momentum. Price could have just simply blown right through this supply zone. Could have easily just pushed right through it, as I think that happened to us somewhere around here. But price could have easily just blown right through the supply zone, right? So that's why it's important that you have some kind of entry criteria to enter into the market. So I hope you guys enjoyed this video. If you did, be sure to hit the like button and subscribe if you're new, if you want to stay tuned for more content. And again, guys, Monday is the start of my FTMO journey. I hope you guys are ready. I hope you guys subscribe and watch me pass the challenge, right? Get funded 100K and continue up from there. So again, if you like the video, be sure to hit the like button. Subscribe if you want to stay tuned for more. Peace out, guys. Happy trading. Good luck this year.